picks today, we're taking a look at three stocks that may offer defensive qualities in a tariff war. Our guest is Ernest Wong, Head of Research at Baskin Wealth Management. Thank you very much indeed for joining us. It's hard to generalize, but what would you be looking for in a tariff-resistant stock?
Right. So when we're looking at the consumer sector in specific, what we want to look for is strong brands that consumers that provide differentiated products that consumers are willing to pay up for. And we think that this is the best protection in a world where there's uncertainty with things like tariffs.
Apple down like other big techs. What attracts you here?
Yeah, so for Apple, the stock has been impacted by some of the concerns about the pace at which they're integrating AI into the things like iPhones and Macs. Too
slow for some investors, I think.
Exactly. Yeah. We think that if you take a step back and look at Apple, they have an incredible brand. 70 to 80% of teens want iPhone and Mac over competitive products. And if we think about what Apple is, the way that they integrate software and hardware together in all of their products to provide a superior experience, and especially the way that they put privacy at the heart of all their products, we think that this positions them very, very well for the future with AI.
Of course, tariffs could ultimately hit them if Trump puts duties on stuff from China. They make so much in that country.
Yeah, so in Trump's first term, Tim Cook, the CEO of Apple, very publicly came out and built a very strong relationship with Trump. Doesn't seem to be as convincing this time around, but we think that Apple has a lot of ability to be able to offset these tariffs. First of all, they have a very strong brand, so they can raise prices if necessary. Mm-hmm. Secondly, a lot of their products, especially iPhones, are sold under carrier incentive plans or installment plans. So the actual impact to the consumer is going to be much less than the tariff that is in place.
Ferrari, they've already announced a price increase.
Yes.
I think, is that just in the US market? Or?
Yes. Okay.
And of course, the buyer of a Ferrari is not that price sensitive as a rule.
Exactly. So the problem for Ferrari is that they make all of their cars in Italy. So obviously, they're going to be impacted by the 25% automotive tariff. I think that, as you pointed out, Ferrari buyers are not exactly the most price-sensitive buyers. And I think and Ferrari has already implemented a price increase of 10% on some of their models. Mm-hmm. We think that there's going to be additional levers for Ferrari to be able to offset tariffs going forward, including the ability to pass some of the tariff increases into the dealership network, and also arranging for delivery for some of their buyers to take delivery in other countries.
Oh, the Caymans or something, or whatever.
Right, exactly.
Yeah, these people tend to have offshore entities.
Yes.
Yeah. And you may have touched on this. America is, or the Americas is only about a quarter of their shipments.
And exactly. The last lever that Ferrari has is to be able to divert shipments to other countries, which they have a history of doing if demand falls in certain of their geographies.
Right, because I guess there's Asia, the Middle East. Right. These cars are wanted by.
And there's a 2-year waiting list in most places. So some people are going to get their cars a bit sooner.
Would you ever buy one if you could afford it, Ernest?
Of course.
You would? You love them?
I'm a Ferrari guy.
Are you? What's special about them?
I think it's really the brand and the community that they build, the events that they host for Ferrari owners to be able to drive through scenic routes, those kinds of things.
Kind of like Lululemon, they used to, or they probably still do, host yoga events and stuff.
Yeah,
the community, Yeah,
and I think those are those kinds of things that we really look for in a quality brand, because it provides a sense of community among the people who are participating and provides pricing power.
They are beautiful cars. I'd never buy one because I'd be just concerned about the repairs. I'd feel the windshield wiper goes, and that's going to be goodness knows what.
Yeah, I would say, when you're buying a Ferrari, it's not the same as buying a Toyota in the sense that you are intending to drive to work and for your daily commute.
Yeah.
It's more as a collectible that you kind of put it there and you admire it.
Oh, for sure. And it is a work of art. There's no doubt about that. We're tight for time. Garmin, what a maker of fitness watches, but with a growing automotive franchise.
Yeah, so Garmin Their focus is in providing niche products that provide very high performance for specific end markets. So they have key watches in golf, they have the major position in fitness, and they've been gaining market share over competitors like Apple because of that strong focus. One specific catalyst that we like about Garmin is that, especially in Europe, there's been a lot of regulations preventing Apple from favoring their own products.
Oh, okay.
And that is one catalyst that will allow Garmin watches to be able to access data from the iPhone, for instance.
Apparently, Apple has been investing heavily in Apple Maps.
Yes.
Because for a long time, it was seen as a laggard to Google.
Right.
Yeah.
And that's been a key area that Garmin has been investing a lot in, and we expect will allow them to gain market share going forward as well.
Ernest, thank you very much indeed.
Thank you.
Ernest Wong has been our guest, head of research at Baskin Wealth Management. We've got lots more coming up on the Open right after the break.